into one of the biggest tech stories with Backbase, one of the world's market leader in innovative digital platform capabilities, has been increasing its own collaboration with African commercial banks, helping them to stay ahead of technology that helps to facilitate quicker transactions, among other experiences. Heidi Custers is the director in charge of digital transformation for Middle East and Africa at Backbase. Custers joins me now from the Netherlands for a quick chat to Arise Exchange. Good to see you on the show, Heidi. Good evening.
Good evening. Thank you. Hi, Bosun.
Great. Talk to me about how banks in Africa, including Nigeria, can optimize new technologies that help them raise their level of services alongside their peers in developed markets.
Well, there's a lot they can do. There's a lot they are doing. But as we all know, they're not moving quick enough. The elephant is not yet dancing. But what we are watching at Backbase is really the rise of artificial intelligence and how it's being used, particularly in East and West Africa. If you look at it, I mean, just the market in Nigeria alone in artificial intelligence and financial services, we're looking at around 28% growth year on year, and that's going to continue until about 2030. It started with the basics, right? We all know about Access Bank's Ada, Sterling Bank's Kiki, UBA's Leo. Everyone had a chatbot. But more and more banks are playing in the space of artificial intelligence to really help with risk management, fraud management, and lending.
Interesting, but you know, banks, I'm trying to find out how they can effectively navigate when you talk about solutions that they need for banking experience. Should they go or just buy off the shelf, or they need customized solutions to suit local requirements? You think there are different nuances across the various markets? You talk about East Africa, different from West Africa. If you look at North Africa and a bit of a more developed South African market in terms of banking experience, technology adoption and things like that.
It's a bit of both. I think the understanding is that most of the banks are starting to realize that building their own internal digital shops, which are heavy and customized everything from the ground up, means that there is this cost of delay. They end up building the plumbing, and in that building the plumbing, they lose the market entry. Whereas if they had bought early on, gotten platforms to take care of the plumbing, and then only used customization or internal build to differentiate themselves, they would have been able to be more competitive. So we're seeing a little bit of both. I'm definitely seeing mostly, if we look at East and West Africa, a lot more need for localization and differentiation, whereas often the more traditional markets like South Africa tend to take on some of the more Western ways of banking, and therefore it's easier for them to buy off the shelf.
Interesting, but when you talk about partnerships with tech providers, you're talking about Backbase, for example. You folks were set up as a private company, and you want to play in fast-tracking digital transformations, in particular for Nigerian banks that wants to go through another round of recapitalization, for example, and we of course expect them to get a higher regulatory capital, but they need more technology solutions associated with Nigeria's population and consumers. Consumers' structure changing into a very youthful population, very young, folks who just want to have financial services, not necessarily because they have a bank account.
Yes, massively so. I mean, just look at the Nigerian market, right? The top Nigerian banks raked in around 50 trillion naira in deposits in 2022 alone. But most of the customers in that country who operate in the informal sector obviously turn to informal when they need credit lending. So there is a huge opportunity for banks to really take an alternative approach when it comes to financial services, and that has to be driven through digital transformation and through partnerships with technology providers and fintechs and data providers.
Well, you've tied up relationship with Danske Bank and others around the world. Who are you tying knot with at Backbase in Sub-Saharan Africa? Give me names.
So in Sub-Saharan Africa, we work with some of the giants on the continent, Standard Bank Group being the one of them. So we operate with Standard Bank Group and partner with them across 5 of their geographies in Africa at the moment. We also work with Mauritius Commercial Bank across retail, business, wealth, and corporate. I&M Bank in Kenya, National Bank of Bahrain, if we move a little bit further, the LIB in Libya, and then also on the West African space, we're working early stage partnership at the moment with Jim et Moi, so moving more toward the payment space.
But you've got opportunities across Sub-Saharan Africa, including West Africa. If you look at whether French-speaking West Africa, with banking groups such as Vista, Bank of Africa, across a number of countries in West Africa and all of that, including Nigeria. So what further opportunities are you seeing to deploy what you have at Backbase to support Africa? If you look at the Pan-African payment settlement system, which you were putting behind the whole intra-Africa trade and all of that, how does that all come together in terms of what is available for banks and what the customer experience will be moving forward?
So Backbase is primarily what we call an engagement banking platform. So because we focus on taking disparate back-end experiences, that spaghetti architecture that a lot of banks and payment providers deal with, we see massive opportunity for bringing that all together. So a typical banking consumer or small business is able to have a joined up experience. So if we look at West Africa, we're not only working with big banking groups like First Rand Group and looking at how do we transform their experience in Ghana, for instance, but also looking at, as I said, payment providers. So how do we link up the experience, not just with one bank, but many, many banks across payment switches like GEM?
That's what I'm looking at this. When you see the various mergers and acquisitions across Africa, for example, Access Bank doing deals in East Africa, then you've got for example, the Equity Bank Group making very big inroads into the DRC, for example. So you've seen banking experiences and culture changing hands from one region to the other. How does it all come together? Is there something there that can help streamline the various cultures and experiences across various jurisdictions in Africa, for example?
Yes, and the exciting thing for me, particularly as someone who has a deep love for our continent, is seeing some of the international banks, while they are maybe looking elsewhere, the rise of the African conglomerate is really where it's coming in. Like you've said, with Equity, EcoBank, and even the more traditional banks like Standard Bank Group. For me, that means that what we're really going to start seeing is centralization of experience with an understanding of local nuance. And that is only possible when the conglomerate operates Pan-African, but understands our market so much better than a big global bank would.
Interesting, Heidi. We're going to be keeping an eye on what you're doing from out there in Netherlands. If you're touching base with any Nigerian banks, let me be the first to know. Let the Arise Exchange be the first to know.
Watch the space. We'll talk soon.
We're going to watch that space. Thank you so much. Thank you so much for coming in tonight, talking to us on banking technology in Africa and around the world. Thank you.